Hello, I'm Lilda Smits for the Finance News Network, and joining me from CommSec is its Chief Economist, Craig James. Craig, welcome back to FNN.
Good to be here.
Now, the first Abbott government budget is set for release in May. What are you expecting Treasurer Joe Hockey's first budget will say about the state of our economy?
Well, the federal government is taking a fairly negative line on our economy. It's playing to its interest that it wants to have a tough budget up front. And very much like Peter Costello did when the Howard government came into place. They had a hard budget, a tough budget first up, and then effectively they coasted for the remainder of the term. But that tough budget really set up the economy quite well. We saw the budget go into surplus and then paying off the debt in the early part of the noughties decade.
And do you think a hard and tough budget is necessary this time around?
I think certainly it's up to the government to be able to get our fiscal situation back in order. So if you have got a very strong economy driven by the commodity sector, driven by China, then we should see a budget closer to balanced rather than the small deficit that we're seeing. So I think it is now a period of consolidation that everyone should be providing their contribution, and I think it's a game changer. The first budget, basically they can set the scene for the new government for their term in office.
So Craig, what are some key points we may be likely to see in this budget?
Well, I think we are going to see very much a focus on efficiency, productivity, very much in terms of the public service, that we're going to continue to see very close looks at the staff numbers there, the sort of contribution that's being provided by the public service. I think too, in terms of welfare, the government's made no secret that everyone should be paying their way, and if it is a case that you're on welfare and you don't need that welfare, then that's going to be taken away. So very much a focus on sort of efficiency, productivity, and then an improvement in the budget line.
Looking closer at the economy, CommSec's latest State of the State report provides a snapshot of Australia's economic performance. So which states impressed this time around?
Well, I suppose if we're looking at those states which impressed, New South Wales has got to be the top candidate there. Last time around it was equal fifth in the rankings, now it's third. And we are starting to see New South Wales economy starting to run on a bit stronger, particularly due to the housing market. For a long period of time, New South Wales wasn't building enough freestanding homes or apartments, but now, driven by higher population growth, driven by higher demand, we are seeing investors responding to the challenge. We're seeing first home buyers as well. Housing market's running on strongly, and that's supporting the New South Wales economy.
Okay, and which states lagged?
If we're looking for the laggards, it's probably the ACT this time around. There's concerns in the ACT about job prospects. And what we are seeing is that the ACT has basically slipped from a position of around about third in the rankings to around about sixth.
So Craig, what are the biggest risks on your horizon as we look out on the year ahead?
Well, I suppose the biggest risks do lie overseas rather than domestically. Here in Australia, our economy is nicely balanced. We've got this transition from the mining sector to the housing sector, and that looks as though it's playing out quite nicely. There's always the risk that the government goes too hard and is too negative, the Reserve Bank doesn't counter that by cutting interest rates. So there's the risk, I suppose, that's there. But I think the major risks are overseas. It's the situation in the Ukraine. It's China, and it's the outlook for growth there. The United States, getting the balance right in terms of winding back stimulus and eventually lifting interest rates. So I think it's more the international environment rather than domestic environment, which offers the key risks for Australian investors over the coming 12 months.
Finally, Craig, I know you're a fan of the diversified investment strategy, but are there any asset classes that you're leaning towards or away from at the moment?
Well, I think, yeah, as you say, I mean, sort of diversified portfolio is something that we do recommend. I think really in terms of residential property and property generally and shares, you're getting good returns out of both those key assets. Probably what you're going to get less of in terms of returns is cash or fixed interest. So we would probably be gravitating more to the property side, the shares, putting those sort of fairly much equal in terms of the portfolio, but much less of a contribution in terms of cash and fixed interest.
Craig James, thank you so much for the update from CommSec.
Thank you.